Hello guys, in this video I will show you what is the importance of capital in trading and investing. It means when you have your account, let's say your account is a small account, let's say it is $10,000. Okay, this is your account. Now suppose you trade or you invest, and in 1 year you get 10%, okay, 10% profit. Okay, what would be uh, what would be the profit in money? Okay, it should be let's see, it's 1,000. Okay, $1,000. This is what you get if you have 10% profit from your $10,000 in 1 year. Okay, here I say in 1 year because when you do the trades, you will do some trades, some good trades, okay, bad trades, and and good trades plus the bad trades, and then you will see what we call the outcome. Okay, the outcome is the profit, and then you see yourself, is the outcome, is it a profit or a loss? Okay, so suppose that you have a profit 10%, $1,000. Now let's say example number two. Okay, example number two, someone has $100,000, and number three, someone has like $1 million. Okay, we can go on and on and on. Let's stop in these three examples. Example number one, example number two, and example number three. Okay, it's the same thing, the same 1 year in 1 year profit. Okay, it's the same thing. Okay, now let's say, so 100,000, it's your account. In 1 year you have 10%, you will have $10,000. Okay, this is your profit. Now if it is $1 million, you will have, okay, $100,000. So what conclusion we can take from these three examples? The conclusion is you should save more and more money to have a good capital. Okay, a good capital, which is a good account. Now when we have a good account, what will happen to you? You will have more choice. Okay, a person who have $1 million, just an example, he can buy Google, okay, which is now it's nearly $9,000, okay, a share, and he can do big trades. It means in terms of money, he can diversify. For example, he invests in many sectors and industries and different stocks. Okay, it means he will be free to choose what he wants, Okay, now for you or for someone else who have a small account like this, $10,000, okay, so you will be always having a problem. Okay, now not just one problem, but you have a lot of problems. Okay, you buy a stock and then you find another better opportunity. Now you will have a problem to sell this, to go to this, to sell this, to go to this. It makes a lot of problem. Okay, and this your account, since it's small, it limits your opportunities. Okay, you will see a lot of opportunities to buy some stocks, but your account, since it's small, it limits your ability to trade well. Now, $100,000 is a good one. It's nearly like from 50,000 to 100,000. This is a good account where you can move in between. $100,000, you can buy a lot of stocks and you can follow them. Okay, so here I give you just an example with 10% profit. Now it could be 50%, it could be 100%, it could be 1%, or it could be a loss. Okay, suppose that you have a loss with 10%, so you lose $1,000. Now if you have a loss here, you will lose $10,000 here. And if you have 1 million, you will lose $100,000. Okay, so this we can change it with loss. Just an example. This I'll show you how your account will grow or decrease, increase or decrease. Okay, suppose that you have a loss here, 10%, 10%, 10%. You will see what will happen to you. So although you see here that this guy has lost $100,000, you think that it is too much, but it is too much for you who has only $10,000 or have 100,000. But he has $1 million. Suppose that mutual fund, he has 10 or 20 or 100 or $200 billion. Okay, it could be a good year or a bad year. So the importance of capital in trading and investing is very, very crucial for your success. Suppose that you have $10,000. How many years, if it is 10% each year, how many years you will get this $10,000 more? Just I give you an example. Okay, suppose that you have profit. Okay, so how many years you will need? Maybe I didn't count it, but you need maybe around 7 years to have 100% and then to have $20,000. Okay, so this 7 years is just an example. I don't know exactly if it is like in 7 years or something. You should calculate it. So but this is just an example. Okay, if you are a good trader and you can have 50% here or 60 or 70 or 100, 200, depending on which stock, on which industry you are, you will have a lot of things. So the best thing that you can do in your account is, this is my advice. Okay, my advice: save more money. Save more money and transfer it to your broker account. Okay, you shouldn't always trade all your account. You can use 10%, 50%, or 30% or 50 as you like, but don't play with all your money. Okay, this is just an advice. Save more money, transfer to your broker account, and trade or invest. And don't use all your money, because if you, especially those who are like risk very much, if you put $10,000 in like let's say in a penny stock, and next day the penny stock goes 50% down, so you will lose half of your money. This is the worst thing that you can do, because trading penny stocks are very, very risky. So if you go to very, very risky, so you see in your mind that it is very, very risky, you can lose a lot of money that you can't control. Okay, so thank you very much for watching. If you have any question, just ask. Thank you.